you still got to know what to look for. You still got to know how to do that. You still got to put all those lots of hours into it to get to this stage. And I think that's the other thing that people fail to see. They just go, oh, he's just trading 30 minutes a day and must be easy. I can do that.
So welcome to with me now with Andrew Mitchem. Andrew was my very first guest on a podcast many years ago. Good to have you here again, Andrew. Good to talk again trading and kind of see where you're at and hopefully get some advice to the listeners.
Nice to be here again, Etienne. Hope you're doing well.
I always want to talk with you. First of all, you are an helicopter pilot. So you fly helicopters, I guess, for fun on your free time. Plus you are trading full time, which is kind of a cool lifestyle for sure. Tell me a bit more kind of what you have to and what you're doing these days.
Yeah, so we're on 11 acres, so I've got plenty of work to do outside. I love the blend of trading and physical work, trying to grow all our own food, which is pretty awesome. And yeah, you're right. When I'm not doing one of those two things, I fly a helicopter privately. Got a big twin turbine machine, which a nice big powerful helicopter, and gets us to see some pretty awesome scenery around here in New Zealand. Yeah, we've tried to fly once, if not twice a week, and get to see some pretty special places. A lot of mountainous areas here, a lot of water as well. And yeah, get to see some incredible spots and land in some pretty cool places, some very remote places as well.
I kind of want to start with trading first. So tell me a bit more. We've done interviews before. We discussed your trading stuff. People can check out. I'll put some links below. People can go through this. But tell me a bit more about what's your trading style these days and what you focus on.
Yeah, so the trading style and strategy has never changed, which is one of the good things. And I get a lot of people ask me that, and they said, what's changed over the last 10, 15 years? And in terms of the coaching, then obviously deliverability has, it changed as things do. But in terms of the actual strategy and what I look for on a daily basis, it's not changed at all. And I see that as a really good thing because it's proof of longevity. We're not chasing market conditions. And I think that's a great thing. One of the things, I suppose, the one thing that has changed is I still use MetaTrader, and I'm a MetaTrader 5 fan predominantly. Having the ability to trade more time frame charts has been helpful. The ability to trade those non-standard charts like 6 hours, 8 hours, 12 hours, I found very beneficial. And by trading them the way that we do, they don't actually take any more time. We're looking at a chart sort of once, twice a day anyway. It just gives us more possible charts to look at to find the patterns that we're looking for. Because I'm a price action based trader, looking at predominantly candles on their close, how they look, where they set up on the chart, have they got room to move to a profit target, have they got some form of stop loss protection. So we bring all that in, a bit of strength and weakness as well. Like if the monthly chart's giving us a bullish direction, then, if the daily's giving us bullish, then bigger picture, a shorter time frame kind of add together. We look at a lot of things like that, but it's price action based.
Maybe a weird question, but why do you care about the 6 hour chart or like the 2 hour chart or whatever, like time frame? Why not just stick to major time frames that everyone looks at? Is there like a big edge in those time frames, or is it just the same?
Yeah, I find depends on the week, to be honest with you. Depends on the market, how the week's tracking, and you never know in advance. Some weeks we find we've just get whole lots of 8 hour chart trades, say, for example. Some other weeks you'll find there's hardly anything on the 8 hour, but the 6 or the 2 hour charts might be setting up well. It purely depends on what's happening in the market at that time on different pairs. And yeah, you just never know in advance. So the great thing is, let's say with trading the daily time frames, is I can look through the 6 hour, the 8 hour, and the 12 hour at exactly the same time as the daily's close. So I'm there looking at my charts anyway. That's at 5 p.m. New York time. At 5 a.m. New York time, when I also try to look, I can look through the 12 hours, the 6, maybe like the 4 or 2 hour charts. They all change over at the exact same time. So we're basically looking for the time frame that gives us that pattern with the best looking pattern. And it's all relative because, naturally a 2 hour chart trade is going to have a smaller candle size than a 12 hour chart in most cases. The stop loss and the profit target on a 2 hour chart is going to be smaller in terms of the size of pips. So the movement we're looking for than a 12-hour chart. But with the way that we trade, every trade that we take, every market that we trade, doesn't matter the direction, the time frame chart, the size of the stop loss, they all have the same equal risk. So for me, it doesn't matter if I take trades on daily charts or 6-hour time frame charts. They all have the same risk, and they all have pretty much the same reward to risk as well. So it's looking for the ideal pattern, not so much worried about, I'm risking X number of pips or making X number of pips.
That's interesting because some people would say that the lower time frame trades have less chance of winning, or like they're more inaccurate than the higher time frame trades. He's saying all of them on all time frames have the same kind of probabilities of working out. They have the same reliability.
Yeah, I mean, in general, you're right. Like a longer time frame chart trade will have more data and therefore probably more reliability. Certainly like a daily will be better than a 2-hour chart. But if I find the 2-hour chart, as an example, is showing a really good, let's say a pull, let's say I'm looking, the market's been falling and I see a little pullback, and then I'm looking at shorting it again, you can ride that real short time frame, say 2 or 4 hour chart sell trade, really quite nicely and do very well out of it. Now, obviously it depends on what pair you're trading and what the stop loss size is and the portion of the spread. You got to be pretty careful with some of those, because obviously you don't want to be paying like a 3 pip spread and the profit target's 15 pips, let's say, make some numbers up here. Whereas that 3 pip spread over a daily chart with a 150 pip profit target is obviously easier to absorb. So you do have to bear in mind the time of day, the spread, etc., like that. But yeah, if the setup's there on a 2-hour chart trade, I'll still take it.
You're saying you use the same reward to risk for all these trades. How do you define the reward to risk that you're using?
Yeah, so I use Fibonacci levels, and so I draw them over a candle. So that candle is, again, let's use some numbers, a 20 pip candle. The stop loss and my extension, my profit target ratio will be the same as if that were a 100 pip candle. The ratio is still the same. The size of the stop loss in terms of, if you're looking at pips, is obviously different. But what we do is that we then make that adjustment in the lot size that we trade. So every trade, if it goes against us and we get stopped out, it has that known risk percentage. So for me, it could be 0.5% or 0.25%, whatever it is that you risk. But you know in advance of taking that trade, regardless of pair, the direction, the time frame, the stop loss size, if it goes against me, I lose X%. And if it gets to my profit target, it's going to make roughly the way I trade between a 2.5, 3.5 to 1 reward to risk, depending on the exact trade.
There's a lot of uncertainty about these like Fibonacci levels. People say it works, people say it might not work because it's not based on anything that much. Have you seen them work well in the past, and what kind of level do you use for these Fibonacci levels?
Yeah, I like the 161.8 extension as a profit target. I just find that it's just such a remarkably powerful and accurate level. I've across all time frame charts, it's crazy, and I can't explain the exact reason. It's just I've used it for so many years, and it just works. I also look at things like round numbers as well. I don't take exactly has to be at that level. If there's a round number, let's say I'm on a buy trade and there's a level ending in 00, just prior to that level, then of course I adjust for things like those levels as well. It's the same as a stop loss. If I've seen on a buy trade a round number or a previous low to the left somewhere, I'm not taking it has to be that my stop loss has to be at the same place every time. I'm still naturally making adjustments based on what I see in some common sense, human input into trading. But I have my sort of basic levels that I'm looking at entering, stop loss, profit target, and they become the basis of my trade with some small adjustments if needed.
It's interesting. Your trading style hasn't changed really much since the last, I think the first time we spoke 8 years ago, which is kind of good to know too. Have you made any changes in the past 8 years? Anything that you do different now than before, or still all the same? No, we haven't. And that's what I like about it. And the other thing, Etienne, that's really quite cool now is that
obviously most of us, especially if we're using MT5 or other platforms, you've got access to so many more markets than we did when we first spoke. Back then we had a few minor and exotic Forex pairs. We had some gold and silver possibly. And now we've just got all these indices, these other metals, the cryptos, the commodities. And I found, and it's, it's been completely by accident because I didn't have access to those markets back in the early days, 20 years ago. I can take a trade on lead, or I can take a trade on silver against the yen or Bitcoin. Today, I've taken a sell trade on Bitcoin right now on a 12-hour chart trade. I can take trades on those other markets, indices, all sorts of things, and the logic works exactly the same. And so all that has done is it's opened us up to be really selective on what trades we take based on, we get high probability candle patterns. And so I've completely removed myself from thinking I live in New Zealand, therefore I'm focusing on the New Zealand dollar or the Euro US because it's the highest, traded pair with the tiny spread. To me, it doesn't really matter now. I'm trading the pattern that I look for. It could be on, Bitcoin or the Aussie 200 or zinc, or it doesn't matter. And that's the beauty of it. So that, I suppose, is the thing that has changed. Logic, strategy, principles remain the same. Just we have access to more markets and more timeframes.
I'm curious how you pick the pairs that you decide to trade, because there's a lot of course correlations that could impact how many pairs you want to trade. They could all be moving the same way at the same time too. So how do you kind of pick the pairs you want to trade?
Yeah, so I scan through, if I'm picking, let's say, as a daily chart, so I scan through all the markets once a day, around about 4:30, between 4:30 and 5 p.m. New York time. So coming up to the close of the day, not a lot's happening at that time. Scan through the charts, and I'll go through like all the main currencies, and I'll scan, let's say, through all the Aussie pairs, all the New Zealand pairs, all the Canadians, like that. And so that's given me an overall picture of Australian dollar, let's say. Is it looking strong against the yen and the franc and the Canadian and the US? So if it is, then I'm thinking up here, well, predominantly that's a lot of Australian strength. So I scanned through the daily charts very quickly. You can do the whole thing in 10 minutes, real easy. And because we're only looking for certain candle patterns, it's very easy to go, yes, there's a pattern that we're looking for. No, there's not. If there is it in the right part of the chart? Is it a reversal trade? Is it a continuation trade? And if it's still a yes, then yes, this is looking like a good trade. Do we have room to move for our profit target before, let's say it's a buy trade, before we're hitting any obvious sort of previous highs? Does it have room to move? I use Bollinger's. Are the Bollinger's tight and there's not a lot of movement going on there? So I either say yes or a no based on the pattern and where it is in the chart, and has it got room to move? Has it got a stop loss protection? And you can scan through, like today I've taken 5 trades, for example, on the daily charts. Most days there'll be between 1 and sort of 5, 6 trades on the daily charts that I go, I like this, it has a high probability pattern. Now, whether the trade works or not, who knows? I can't tell that right now. But all I can do is go, here's the pattern that I look for, and I'm placing the trade. I know my reward to risk is high. If my stop loss gets hit, it doesn't matter. It's a low controlled risk. If my profit target gets hit, then I'm making 2, 3, sometimes 4 times my risk.
Would you change your risk if the trades are all happening on the same currencies or very similar currencies that are correlated?
Yeah, good question. If there's a lot, actually today's a very good example of that. There's a lot of yen trades setting up today, a lot of reversals on the yen. So I'm looking at buying a lot of pairs against the yen, so a bit of yen weakness coming back in after it's been really strong. And so I'm looking at those going, today I had about 6 or 7 trades, all looking at like Aussie yen, New Zealand yen, pound yen, Singapore yen. And so I went through those and go, okay, these are all against the main trend. They're all reversals. I need to be really selective on which ones I think are the best. So I've looked for cleanest patterns. I've looked for other markets that are looking strong, like the New Zealand dollar is starting to have a bit of strength today. So the New Zealand yen was one that I picked. But if I had, let's say, 4 yen trades all looking similar pattern at the same time, I either eliminate a few and go, well, these are my best, strongest looking 2, or I might take them all, but just reduce the overall risk per trade. So I don't want to be suddenly going, I'm taking 0.5% on each, because likelihood is they're either all going to work or all not work. So I don't want to be like increasing my overall exposure, especially on a reversal trade. If it was a continuation trade, as in like we've had an uptrend, a pullback, and now we're looking to buy up again, that's probably, I'm a little bit more flexible with that because it's trading in the main direction.
Splitting the risk is the way to go. It's definitely easier to manage it that way. You've been in the business of trading for a long time now. I'm sure you've seen people come and go, trying it out, maybe quitting eventually. What do you think differentiates the guys who stay in this long term and the guys who just don't stay in this long term, who like quit after a few years or maybe less than 1 year or 2?
Yeah, it's interesting. So I've got people that will be on my webinars that have been there 15 years. And I have other people who after a few months, you don't hear from them. You've really got to want to do this. I think that's very important. You've still got to have that excitement and enjoyment out of it. You've got to approach it realistically. And obviously now there's more ways of doing well on prop firms and all that type of stuff, which is great, but you've still got to be in a position to do that properly. You can't just come into the market and go, I know nothing about trading. I'm going to spend a month researching online or doing a course or some podcasts or something, and then go, I'm going to go and open a prop firm. Because, and the issue that I see is it's almost made it become almost seem too easy. And as you and me both know, trading's not easy. You know, it takes time and dedication, skill, etc. to do it. And I think if you come into it with your sole intention is to have to make money, it's probably not going to work for you. If you come into it with the intention of, I'm going to dedicate a bit of time into this, a bit of expense, and learn it properly, and do the basics and do the homework and seek help if that's the way you want to go, and be consistent, then it will work. A lot of people come into it a little bit sort of either gambling mentality or, don't see that they have to put some effort in. I think that becomes the issue. But look, I've got a lot of people who are doing incredibly well, and prop firms are a big help for some of them who choose to go that track. But what people don't see is they've gone and done a year or 2 of work and demos and small live accounts and some successes and some failures to get to that stage, like you and me both have. I'll go back to the helicopter example. Fantastic, fly around, do all these cool things, but I've been doing that for 10 years, and it's taken a lot of trial, not so much trial and error with the helicopter, but a lot of effort and dedication and learning and expense to get to that stage. People just see the end result and think it's easy, and don't see like anything good in life, it takes a bit of effort.
Yeah, it's interesting how trading seems easier when you look at it from the outside, when you've not tried anything yet. You kind of think you can just learn it and then, learn a strategy online, and you just do it and succeed. Well, it's actually a lot more work than just that. It's interesting.
That's right. Yeah. And even if you trade like I do, maximum 30 minutes a day on charts, twice a day, you still got to know what to look for. You still got to know how to do that. You still got to put all those lots of hours into it to get to this stage. And I think that's the other thing that people fail to see. They just go, oh, he's just trading 30 minutes a day and must be easy. I can do that. Well, yeah, it is over time, but you've got to develop that skill to be able to get to that stage.
Would you say you're now fully mechanical, or are you kind of using some discretion in your trading?
Oh, it's definitely discretion as well. Mechanical is not 100% mechanical. I suppose mechanical in terms of like, does this look like a suitable pattern or not? Yes or no. And then a little bit of discretion comes into it. So I think you always need that as a manual trader.
I'm sure you get that question a lot, but people are probably asking you, like, why don't you trade more if you're so good at it? Like, well, wouldn't you trade like 5 hours a day or maybe 2 hours a day, like trade more to succeed more?
I don't see the need to, and I've been trading for over 20 years and I still enjoy it and I still love it because I find that you can blend it with other things in life. I think if I just sat here purely glued to the screen 5 days a week, and now, of course, crypto's at weekends as well, I wouldn't enjoy it. And, even if you're making lots of money from it, it's like, why would you do that if you could do that and I'm not doing the 30-minute thing to be lazy. I'm doing it because that's what suits me. There'll be some other days where I'll look at 4 or 6 hour charts during the day and maybe more than 30 minutes. But as an example, I spent a few weeks in Europe a couple of months ago, and I was just trading once a day, and still did really well. You don't have to trade all the time to do well. To me, it's more about the quality of your trades, not the quantity of them.
Yeah, that's a very good point for sure. So that's the other thing if people don't think about trading too, is that they're trading because they want the excitement of like trading, being in the trade, getting out, like having a lot of fun doing it. Some people who would do your style might get bored over time. Like for them, it's like too boring. They just go in and they follow the rules, they go out. I mean, I'm curious to hear, like, I'm sure that's not the case for you, but why do you think people cannot just stick to rules like this and kind of just do it the way you do it?
It's interesting, isn't it? And look, I do have people that trade the short time frame charts. Some people trade 5 and 15-minute charts. I've got one guy that trades 1-minute charts, because that's what he wants to do. And it's like, go for it. If it works, and it is working. But I kind of like to think that with trading, especially to start with, the reality is that most people have a job or family or travel or whatever it is in life. And the reality is that most people are not going to dedicate all day and night sitting watching charts to start with. So if you can make something work by looking at your charts once or twice a day and still do your normal life, what it does is it takes away that need to have to make money from it again. Like if someone comes to me and goes, I'm going to quit my job in 2 months and I'm going to become a full-time trader, I'm going, whoa, that's right. Have you really thought this through? Probably not a great idea. It's too much pressure. So look, yeah, in terms of the excitement of it, I still get excited once, twice a day of taking trades, but I don't feel the need to have to sit there watching every pip move up and down and risk a crazy amount on a 5-minute chart. And the thing I found years and years ago when I did look at those shorter time frame charts is that I felt I should be taking a trade because I was sat there at the computer and I was ready to trade, rather than the market telling me it's ready to give me a pattern. And I think there's two distinct problems there. If you're trading short time frame, you just bring too much emotion into it. You start doing silly things, or you start rushing your trades because you're worried about the price taking off and you haven't got in yet. You go, oh, it's bounced back, it's moved back 3 pips, I'm going to close it, close the trade quickly. And it's like, that's not what your rules say you should do. And if you get away from that emotion, and that's where I come back to the thing, it doesn't matter what time frame chart you trade. The way that I trade and teach people is that every trade has the same risk. So you could have a 15-minute trade if you want to, or you could have a 6, 8, 12-hour chart trade, or a daily or weekly chart trade. They both have the same amount of risk. It's just that one's got a bigger stop loss than the other, but likewise, it's got a massively bigger profit target than the other. They're still the same reward to risk, same risk per trade. It's just your lot size changes. So it comes down to what type of trader you want to be.
Is there anything that you wish you had done differently in your trading journey, or anything that you didn't do but you would tell people to do in their journey as they become good traders?
I went through everything possible that you can imagine. When I started trading, it was the early days of TradeStation. It was the early days of expert advisors. There wasn't a lot of proof in what people were doing on those things. So all that, I've been through all that. I've been through the news trading, living here in New Zealand, been up in the US hours at like 3 o'clock in the morning and all those things. I've straddled trading, non-farm payrolls, done all that. If I had someone to actually guide me and someone to follow in those early days, that would have been a massive advantage. And I'm not just saying that because I'm a coach. But I'm saying that because if you had a community of people who were all trading one strategy that was a successful strategy, that would have helped. What I found when I started trading is that you had, I'm not going to name names of different community Forex sites, but there were some sites out there that had all these threads that looked really cool, and then it would go off on a tangent. It would never, like a week later, it would never be the same strategy that it started because someone would add all these things. And what I love with our forum site is that it's one strategy. Everybody's there looking at the same charts at the same time, trying to help each other. And I think that genuine community of whatever your strategy is, however you want to trade, if you have a community that's dedicated to people just looking at that one strategy, I think that would help. It helps remove that clutter that you have, all that doubt that you have. I like everybody else in the early days was jumping from one idea to another idea to another idea. And the reason I was doing that is because none of them really worked. And I couldn't find out there a proven strategy. So I think if you have a proven strategy and someone to help you and a community to help you, it's going to be a massive shortcut in your learning curve and your confidence. Improves your confidence.
Kind of sad to see that the trading industry or trading education goes to like stages like trends. Like there's been years ago maybe some strategies popular, like people were all learning that stuff. Now it's like something different. They're all learning this stuff now, like a different concept or something. People seem to look for the next like best thing as opposed to what works already, or actually what's trending and like compared to what works already, or what's been working for like maybe 30 years before.
Yeah, and I think people are just naturally short attention span a lot of time, unfortunately. And it's, you're right. It's like, well, if something's worked, wouldn't you want to actually go and learn that? Why do you want to reinvent the wheel when the wheel is working perfectly fine? And the other thing is, I suppose, when people get into trading, is that they see all these lovely flashy indicators that the brokers will put on their charts. And they think that if we add this indicator and I create this combination of settings that no one else has ever thought about, then it's going to improve this system even more. And that's a very easy trap to fall into. And a lot of people get into back testing, and as we know, I've never found back testing to be true in real trading. You can have the most amazing back tested system, and this crosses over that and does all these things. Take it live and it fails. And I think that whole over optimization, and people just get caught up in a big trap. And reality is that on a chart is that the price is going to move up, down, or stay sideways. That's all it can do. And so that's why I went back to looking at the price and why does the price bounce at this level? Oh, it's hit a level, it's hit a round number, or it hit that level back here. And guess what it did back there? It dropped. So guess what it's going to probably do now if we get the candle pattern is drop. And so going back to those basics of looking at the right-hand side of the chart, how many people do we both know that come to us for trading ideas and they never look at the price?
Yeah, I mean, there's a lot of ways to do it out there for sure. At the same time, like, how do you know when it's enough, when you have like a good enough edge for the market? That's tricky for you traders to figure out too. Is like they want to add more things, then they might say like a drawdown, then they want to have that drawdown, so they kind of tweak it more and more until it's even better. But then how do you know when it's enough to make money?
That's right. And one of the things I look at, especially now as people are moving into prop firms, and I say to people, what's the number one rule about passing a prop firm? And they go, oh, I've got to get to 10%. And it's like, no, that's not the number one rule. The number one rule is don't get stopped out. Don't hit the drawdown level, because that's the way you're going to fail that prop firm. So having something that isn't stupidly risky, that does allow a few losing trades, you have profitable trades you do well, that to me is the most important thing, because after all, a prop firm's not your money, it's not your capital. So what they're looking for is someone to preserve their capital. Sure, they want you to hit your profit targets, but first of all, you got to not lose their money. And I think that's where people who are new, all they see is I can make X amount of money, or my system makes 100% in a month. But they fail to look at what the drawdown was, or even emotionally what that drawdown is going to do. Like if you've got $100,000 live account and it's your money and you're suddenly 50% down, well, you're hurting. But not only that, is you now need to make 100% gain just to get back to break even. And a lot of people don't understand the maths behind drawdowns. Likewise, if you have a consistent system that does well, but just steadily does well, compounding is another rule of maths that we both know can be massively in your favor if you have a good system. So you don't need to make ridiculous gains and risk ridiculous amounts to do well. You just need to be controlled and almost boring approach by it, because that will ultimately win. The tortoise and the hare story, slow and steady will win.
By the way, do you still backtest, or do you still recommend people to backtest, or is it something you completely avoid doing?
I encourage people to have a look at what if someone joins my course, I encourage them to go and have a look at what we've done. Go and pick a year in history, like pick, 10 years ago, 2014, for example. Go and look at the trades that we posted back then on our daily charts or on our forum site. Go back and look at your charts, see what it was in that time. It could be a month ago, it doesn't matter what time it was, but just go and look at what the charts look like at the time without any of the benefit of hindsight, and look at that chart. This is what the market was showing on this day at this time. We took a buy trade here, and this is what we saw at the time. And so use some of that proven information of real trades that we took and go and train your eye so that when you see that in real time today on the right-hand side of the chart without any benefit of what's coming, because we don't know, because we're taking it now, you see that same pattern, that has to give you confidence because you've seen all these multiple times in history that the same patterns occurred. So I'd encourage people to backtest visually that way, but using real trades that we posted or other clients posted.
That's a good way to do it for sure. Good way to build confidence and kind of get used to spotting setups and spotting trades. That's a good one.
Purely training your eye. It's training your eye to see the pattern, because the hardest thing of real-time trading is to do it like right now, make that decision with real money from the right-hand side of the chart. You see all these people showing trades that they took, and they always show the benefit of hindsight. And they show, we saw this massive trend. And it's like, well, at the time, you didn't know that was a massive trend. You can only tell me it was a massive trend after it's happened.
At the time, it looks scary, probably, or something you don't want to get in, maybe. Yeah. It's good to hear, you're at the level where you've been trading now for many, many, many years. You've been coaching traders. And good to hear, what you look up to. What are your goals now? What do you want to get to with this?
I still love doing it from a personal point of view. I still love the trading, the lifestyle that it provides. Like we said, hard work, and it pays off in the end. So I still get a kick out of it, and I get a kick out of it because it's a challenge still. It does allow me to do other things from the trading point of view. From the coaching point of view, I love the community. I love seeing successful people who work hard. We're getting, as I mentioned, prop firms now. We're getting a lot of people. It's changing lives. It genuinely is changing lives, and I love that. For people who want to work hard at it. So that's really exciting and encouraging. And it's probably getting more and more people that are getting to that stage as well. So I love the community, family kind of aspect of it as well. Prop firms have been a game changer. They have some potential downside for people who don't understand how to trade them, but for people who do, I think they've got massive potential upside as well. Yeah, so we just continue to do what we do because we enjoy it. Like I said, those other markets have actually been quite fun. Who'd have thought 5 years ago we'd have been talking about trading lead and Ethereum and, China 50 index and things like that. And so I think that's quite fun, and to see where that might go as well. Other markets that we don't even know we can trade today in another 5-10 years time. That could be really interesting. But it's just nice to have decent people, help people, have a community. Good team of us, that I've got in America and the Philippines and the UK as part of the coaching team as well. So I enjoy that. Just like-minded people doing great things. And it's just fun to be a part of.
Andrew, I always want to talk with you, of course. Tell people where they can connect with you or find out more about your work and what you do, how they can get help from you.
Yeah, have a look at my website, theforextradingcoach.com. I'm sure you'll put a link somewhere on here as well. There's a very short, I think it's about an 18-minute video that I encourage people to have a look at. It's pre-recorded, so you just watch it when it works for you. Just basically goes through, this is what we do, how we trade, some trading examples, and just gets people into the idea of what it is we do. I put out a video and a podcast each week, so I'm up to number 555. So there's plenty of those people to go watch and listen to. And if they want to come on board, then we have people can come and talk to us or book a call with myself or one of my team, and just find out if it's right for them. Make sure we're a good fit and they want to be part of it, and we think they're a good fit for us. And that's what it's all about, really, making sure it's a good fit from both sides.
Yeah, you're one of the best ones out there. You've been there for so many years. It's pretty crazy, but that's awesome. I mean, you help people a lot. So I've seen your students, they always come back to me. They always say they had good value from you and they learn a lot. So good to hear, and good that you've been able to help others for so many years that way. Now, these are the people can check it out, connect with you there. Hopefully you can catch up soon and discuss trading again. It'll be fun to catch up eventually.
Look forward to it, and thanks for everything that you do for the traders community as well. You're doing a fantastic job.